Imperial's full-year headline earnings per share ticked up 14% to £15.66. That was announced earlier today. The industrial services and retail group saw revenue climb 25% to just under 81 billion. Really, really good numbers these. Samantha caught up with Hubert Brody, the CEO of Imperial, earlier on today and asked him whether the numbers were a result of strategic positioning in Europe. Here's what he had to say.
So we've always knew that Germany is the heartland of industry in Europe, and it's the industrial powerhouse where the most manufacturing takes place, and that the German export industries would always do well, and there would always be global demand for German products. So we certainly had that in our strategy, but more than ever before, the proof of the pudding has been over the last year that it's come through very, very strongly. And then we've done a significant acquisition in Lenkeren, which takes us into the chemical industry, and it's strengthened us even more. The chemical industry is a very defensive industry, and it's also very stable. So the business is in a very good shape there.
Of course, around 15% of your earnings now come from Europe. So what is the plan now to leverage off this acquisition and to solidify your position in a market that everyone from the outside would go, you know, why are you growing in Europe? Can you explain to everyone what the strategic plan is with Europe?
Importantly, our European logistics business is not a general logistics business where we try and be in all the countries of Europe or in every aspect of the logistics industry. It's a very niche business focused on inland waterway shipping, on contract logistics, certain inland port logistics activities, and the chemical industry through Lenkeren. So within those niches, we would grow that business. We're confident we know those industries well, and particularly around Germany and somewhat to the Eastern European areas. We think there still are good opportunities.
When we're looking at the South African logistics side of the business, you mentioned it's been a challenging year. Overall operating profit up by 15.8%. Margins have been compressed. Is this as a result of a tougher competitive environment, lower volumes? Why is it so challenging right now in South Africa?
Our clients have been generally under pressure, and many of our clients are in the manufacturing industry or broadly maybe in export industries. And these industries have been under pressure. We've seen that there's been a lot of industrial action, particularly in the beginning of our financial year. They were in the steel industry at the time, in the fuel industry. So our clients have had a difficult period, and they're looking for cost savings, so there's pressure from that side. And then also the infrastructure investment cycle in South Africa have really not come off the ground yet, and many of our clients are in that market as well. But we've had a good year in the sense of good contract gains, and there's been a number of acquisitions that's come through the numbers as well. So notwithstanding the playing field being tough, the outcome was quite satisfying.
When you're talking about the African division, it's interesting that you mentioned that South Africa is starting to lose a bit of its edge in terms of being an entry point into the African continent, and other trade corridors are becoming more cost effective and reliable. Can you just elaborate on that and how that specifically affects your business?
Yes, there are good ports on the west coast of Africa starting to develop, and on the east coast certain ports. So the entry point and the distances to the hinterland of Africa are actually a lot shorter from these ports. So it's very important that logistics companies reposition themselves to covering the west-east axis also very, very well in the future. And we're in the process of doing that and making sure that we cover those transport corridors. But yet in the distribution business in Africa, we've performed well. The acquisition of CIC, which we did 2 years ago, have given us a network of warehouses in a number of African countries. And really a warehouse is the nucleus from where you can do transport activities and distribution activities. And in a competitive environment, that's done well and it's actually given some growth to our African business.
Let's talk about the vehicle side of the business, automotive, your retail-orientated businesses. New vehicle sales market in South Africa has been particularly buoyant. You've really done well as a result of this. So just give us an idea of how that's translated into earnings for the company.
Yes, the new vehicle market have been strong in the country, and we've been fortunate that we had a very good mix of product which we import and retail, and we started particularly the second half year off with very good inventory levels, and therefore in the second half year our volumes were actually up by 30% in our distribution business, and our distribution business came through with a very strong operating performance, and was one of the stars of the year.
When you talk about gaps, though, in the supply chain, in the automotive side, you've still said that even though you've been exploiting opportunities, you've been making acquisitions, growing organically, you've still identified gaps in the retail market. So where are those, and how are you going to fill those, basically?
Yes, it's not all about selling the car. You know, once a person has a car, there's certain accessories which you need to add to a vehicle. For example, some years ago we bought a canopy business, and that business has performed very well. So the gaps are in the accessories side of things, but also in the financial services business, because when we retail a vehicle, we also have an opportunity to sell a financial product to a client. We have joint ventures with banks in the financing of vehicles. So we think there's still a lot of product and a lot of more opportunity in addition to the sale of the vehicle, which we can do and that we can capitalize on.
You spent rather 1.9 billion rand in acquisitions, 15 acquisitions last year. I mean, this is a company that has just been on a huge growth path in terms of acquisitions. How much money would you like to spend this year on acquisitions?
We don't have a specific amount that we put aside, but we have a gearing level, a target level of between 60 and 80%, and currently our gearing is at 39%. So we have significant capacity of a couple of billion rands that we could spend if we find the right opportunities, and that if they according to our criteria, fits our business and gives us the right return.
If you had to take a longer term 5-year view of the company, I mean, currently you've got 15% of your business situated in Europe, 5% in Africa, and the rest in South Africa. What's the longer term goal for these various geographies?
Yeah, we believe in the niches in Europe where we play, and which we've identified as suitable for our skill set. We believe we can grow. If that business grows by another 10% to say 25% of the group, that would suit us well. And if we can grow our African business as well, and if we ultimately double our African business, that would be good. But it would be specifically in logistics. Logistics is the main area of growth, particularly geographically, of our group.
Where are you underrepresented in Africa? Where are you seeing specific territories in Africa where you need to grow?
Look, the territories in Africa where we would like to further grow is north of the SADC area. We're reasonably well represented in the SADC countries, and then if we would like to grow somewhat up the east coast, countries like Kenya and Malawi and Tanzania, and then we are looking at some opportunities in Nigeria, and hopefully that will give us a foothold into that very good opportunity in that country.
Are these acquisitive opportunities, or is it going to be organic growth through what you already have right now?
It could be organic growth, particularly where we go with an existing client. Because South African clients in logistics are really looking for world-class service even as they go into Africa. So that could be organic, but in other ways one need to actually acquire the platform, like we've done with CIC, and that's given us a platform to actually grow and serve the client. So it would be a mix.